Welcome to the Riskwiser Zone. I'm your host, Lewis. Today, we're diving into the latest developments in the world of stocks and finance. We've got a lot to cover, so let's get started. In recent news, Oracle Corp has taken a significant hit, with its stock tumbling down by over 11% after the company disclosed a sharp increase in capital expenditures tied to AI data centers and infrastructure. This move has raised fresh doubts about when these AI investments will translate into meaningful cloud revenue. The quarterly spending climbed to around $12 billion, well above expectations, while the company lifted its full-year capex outlook to roughly $50 billion, a $15 billion increase from its September forecast. This development has sparked concerns that heavy artificial intelligence spending is straining balance sheets faster than it's generating returns. As a result, investors are rotating cautiously into other sectors, underscoring growing sensitivity to spending discipline rather than top-line growth alone. The Nasdaq 100 slipped, and AI-linked names that have powered much of this year's equity rally are also feeling the heat. Meanwhile, in the crypto market, Bitcoin and Ether are trading with relative stability, decoupling modestly from equity weakness as traders remain selective about risk. Bitcoin is up about 2.6% on the day, stabilizing after a volatile stretch that briefly dragged prices toward the low 90,000s. Ether rose alongside Bitcoin, climbing toward $3,260. As we navigate these complex market dynamics, it's essential to consider multiple perspectives and stay informed. The Federal Reserve's outlook has become more fractured, and investors are poised to remain tactical. Near-term direction will likely hinge less on policy signals and more on whether earnings and liquidity can justify the next leg of risk-taking across assets. We'll be keeping a close eye on these developments and exploring their implications in more depth throughout the show. For now, it's clear that the market is at a critical juncture, and investors must be prepared to adapt to changing circumstances. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the fascinating world of finance and risk management. In our last segment, we delved into the complexities of global markets. Now, let's shift our focus to a compelling story that highlights the intersection of technology, energy, and investment. A recent report has caught our attention, showcasing how green stocks are experiencing a significant surge due to the tech boom's increasing demand for energy. This trend is particularly interesting as it underscores the growing importance of renewable energy sources in meeting global power demands. Companies like Bloom Energy Corp, Sungrow Power Supply Co., and Siemens Energy AG are among the top performers, with gains far outpacing those of major tech players. The driving force behind this momentum is the exponential growth in electricity demand from AI training and services, predicted to quadruple within a decade. This makes data centers one of the fastest-growing electricity users worldwide. As a result, investment in renewable energy projects has reached a record high, with $386 billion invested in the first 6 months of 2025 alone. While concerns about overspending on AI by big tech companies introduce a note of caution, market analysts believe the long-term outlook for the clean energy sector remains robust. The valuations of these stocks, trading at about 20 times forward earnings, are seen as attractive compared to their historical averages. It's essential to consider both sides of the argument. On one hand, the push for renewable energy aligns with global efforts to reduce carbon footprints and mitigate climate change. On the other hand, the role of traditional energy sources like oil cannot be immediately dismissed, given their current dominance in the energy landscape. As we navigate this complex scenario, it's clear that the future of energy is multifaceted, involving a mix of traditional and renewable sources. Investors are taking note, with significant investments being made in clean energy projects around the world. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the key market movers and shakers from around the globe. The U.S. stock market saw some significant gains, with cruise line operators like Royal Caribbean Cruises Limited and Norwegian Cruise Line Holdings leading the charge. Managed healthcare stocks also had a strong day, with companies like Elevance Health and Centene seeing notable increases. On the other hand, chip makers like ARM Holdings plc, Intel, and Marvell Technology took a hit, weighing down the Nasdaq 100. Oracle's disappointing Q2 revenue report and increased capital spending outlook sent its stock tumbling over 10%. Oxford Industries and Lovesac Co. also saw significant declines after cutting their earnings forecasts. However, it wasn't all doom and gloom. Gemini Space Station Inc. saw a massive surge of over 31% after getting approval for a derivatives exchange from the Commodity Futures Exchange Commission. Ciena Corp and Visa also had strong showings, with gains of over 8% and 6% respectively. As we analyze these market trends, it's essential to remember that investing always carries some level of risk. It's crucial to stay informed, diversify your portfolio, and make decisions based on careful consideration of the facts. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.